Test. Okay. Test. Technical difficulties here. So why don't you say something again, Al?
Okay, something again, Al.
All right, here we go. Here we go. Hello, everyone, and welcome to this edition of Investing with Confidence. As always, I am your host, Joshua David, and we are happy to have you with us today. I do have my good friend, my good pal, Mr. Al Connickson. Al, how are you doing today?
You know what? I am doing fantastic, Josh. How about you?
I'm doing fantastic. It was a nice, exciting week in the stock market, and that's some of the stuff we're going to talk about here today about how exciting this market is. We're seeing a lot of really good moves in the financial markets. Well, let's start with the stock market. Talk about an up and down week, which is volatility in the market. And that's what a lot of investors are unsure of how to use this price action, this volatility in the market. Well, we know at Online Trading Academy it's a good thing. Just quickly about our sponsor, Online Trading Academy, on their 25th year, teaching people just like you how to trade, how to invest with the stock market, options market, futures, forex, cryptocurrency. Whether you're new to the markets or maybe you're a seasoned investor and been investing for many years and just looking for a boost, Online Trading Academy teaches techniques and skills to make smarter investing decisions. And Al, with these, we'll call it volatile markets, we had some good moves this week. So let's hear your recap on what's happened this week. What can we see potentially moving forward, and what's some of the catalysts of these big moves?
Yeah, those are all good questions. The big moves we're seeing. I mean, these have been some, you used the word volatile. They really have been. If you look at some of these movements, we're still seeing these multi-hundred or 1,000-point swings in days or a couple of days in these markets. And there's a lot of things going on. I mean, think about it. We still have the issue with the Russian-Ukraine war and the impact of that, which really hasn't totally been felt yet. But, I think this is a time when we see this kind of volatility, uncertainty, that for some people this is a time to be concerned, and for other people it's a time to be excited. I think this is one of the most important times for every investor and trader out there to be active in their trades and their investments and active with your portfolios. And I think one of the mistakes people are making in this environment is what we call recency. If you look at the last 2 years, the S&P 500 has had probably the greatest return that we've seen since about 1937. The market has, since the drawdown in March of 2020 when coronavirus really hit, the S&P 500 has more than doubled. And the problem is people have a hard time looking back far enough to realize what the average real returns will
yeah,
be.
Exactly.
So, and this is one of the things that's happened. Now, investors that have been surveyed have said that they believe that the post-inflation returns coming up for them over the next few years is going to be about 17.3%.
That's what they feel.
That's what they feel, and that's up from about 10.1% not that long ago. If you go back and you look at the average returns, this is triple the average returns since 1973.
Yeah.
So the concern is that people have these high expectations for the market to continue, and it's not going to. And it's not just us saying that, Josh. You look at some of the big players out there. Goldman Sachs now is saying there's plenty of signs that returns will be particularly hard to come by for the rest of the year. They're looking at best case scenario. That's best case scenario for this year of being 4%.
That's funny that you say that, is because, stats say people that are not educated in the financial markets typically struggle. And that's why we have investing classes to educate people on how to make better investing decisions. But if that study is saying they're expecting this high return, it's potentially something that could be totally opposite that could happen here. So it's crazy how people are conditioned almost to think, what could happen the opposite way sometimes, the wrong way.
Yeah, and I don't. We don't mean to when we talk about some of these things that we're going to be talking about. It's not meant in a negative way because the market has opportunities in different directions.
Yep.
And you mentioned the important word. It's knowledge, it's education to be able to access the right strategies and assets to use, regardless of what's happening in the market. But let me finish on what I was saying about Goldman Sachs. That's their best case scenario is 4%. their worst case scenario is around a downfall of about 21%. But then when you throw in the high inflation that we're experiencing, an inversion in the yield curve, which we saw for a while there, and that may come back, that 21% could end up being the best case scenario, being down 21%. Here's one of the previous Fed presidents, the New York Fed president, and again, don't assume that this is going to be a bad thing for you, because what we do is we help you to maneuver markets like this. But this guy said it's hard to know. This is Bill Dudley is his name. It's hard to know how much the U.S. Federal Reserve will need to do to get inflation under control. But one thing is certain, to be effective, it'll have to inflict more losses on stock and bond investors than it has so far. So he's looking for some pain coming down the road here. There are other companies that are saying the same thing, and we're seeing green green light information for the recession. There's red light information out there. So which way is it going to go? We don't know for sure if we'll have a recession. We don't know for sure if this bond inversion, in other words, the short-term bonds, the 2-year has a higher yield than the 10-year. That always precedes a recession, but doesn't mean 100% we're going to have one now. But you have to be prepared. You have to know how to not only benefit in these different directions, but how to protect what you have.
Yeah, well, really, like you said, the past couple of years, people have done very well. Now it's time to protect that. It's a great point there. But just something here I want to talk about. I think it's really important to kind of explain a little deeper is, some of these different stats that you're throwing out there, Goldman Sachs and all these different, polls that you're seeing out there and articles. And what really happens is you create an opinion then, right? And, what Goldman Sachs is saying is that true? Could that happen? We don't know. Yeah. Could they be feeding the public something they want us to hear, or is that something that they really feel? We don't know. And that's why it's so important in these investing classes that you teach, Al, right here at the Academy, is how to use price action on a chart, because that does not lie. And when you go through that during these classes, people really see, hey, you know what? My opinion really doesn't matter. It's just an opinion. Everybody's got an opinion, just like other things, right? Use the right information in the
most
markets.
People do, yes.
And that's having a core strategy that's designed to teach you to make better investing decisions. An Online Trading Academy, the sponsor of the show, actually has a strategy. It's called Core Strategy that is designed to teach you to make better investing decisions. We're local academies all across the world, really. Specifically for this show here, Investing with Confidence, we're in Atlanta, Georgia, Denver, Colorado, and Bloomington, Minnesota, and we have these physical classes that you teach locally, Al. So I do want to give away tickets for callers 1 through 10 right now, so get your phones ready. When you call in right now, you're going to receive 2 tickets for this investing class. It's a live class. So that's what everybody loves about these classes. It's a physical place to go to learn how to trade and invest the right way. Call right now. Call 888 682-6466. That's 888-682-6466. You can also text the word invest to the number 484848. Al, you mentioned inflation just a couple seconds ago. I want to talk about that. I want to talk about, we have this inflation. How do you combat that with extra income strategies? Coming up next.